All right, guys, check it out. We had a pretty fun day. It wasn't super volatile, but we have a lot to go over. I want to let you guys know what I think is next for the market. Where is the market going to see a bottom? What does tomorrow's price action look like and the next day? So, welcome back to another market analysis video. This is going to be a midweek update, and since there's a lot going on and the market's pretty volatile, I figured I'd update you guys. So first of all, let's just take a look. Here's today's candle. Not the widest range. It wasn't very volatile whatsoever. We kind of just went sideways most of the day. And if you come down and look at this hourly chart, we can see we made an opening range high. All right, this high was at 324.69. We held the breakout zone that I had mentioned in the weekly analysis. And after we made that opening range high, zoom in here, we can see we broke the opening range high. So immediately that kind of gives bulls their signal that they want to buy, that we may try to go a bit higher, maybe to this 325.70 level. But as the day went on, they weren't really getting anywhere. They were slightly holding. We may have seen a rally into the end of the day. But the last hourly close, second to last, hourly close, comes back and closes below that opening range high. That's an extreme sign of weakness. We could not get anywhere on the upside. And as expected, the last half hour of the day here, we closed poorly. We close below the breakout zone. And so that gives us this daily candle. And so there's a few different scenarios here, right? So one, let's say we gap down, right? Well, there's a pretty clear, if we do continue down, there's a pretty clear area to me of support. It remains this 320.36 right here, this breakup candle low. I said this was kind of an end-all be-all. The market should definitely be bought at this point and see a very nice rally. That still remains the case. We see we have the 50 right under, and we have this weekly trend line that we broke out of that could come for a retest. So there's three reasons there to buy the dip and potentially see a nice rally off that level. Now, I can't tell you if that's going to be a long-lasting low, but I can tell you buyers will show up there as long as we don't. For example, today we came down in futures to this opening level, and we were actually hovering around this opening level for about, I believe, 6 or 7 hours during the night. Don't quote me on that. Here you go. Look at that. So here's the overnight futures. We come down to this level, and so there's 4 hours. 1, 2, 3, 4. Here's the open. And so we have 4 hours where we're already kind of just around that level. And so that's already not a good sign. It's likely that the dip would not be bought very highly. And you always want to pay attention to breakdown candle highs, as we know. So this was the clear level on the ES that it really needed to get above to get any momentum going on the upside. We see that it could not do that. They tried, and we continued riding down into a poor close at the end of the day. So, again, the clear level, if we shoot down to the downside tomorrow or overnight, it remains this level, right? If we happen to gap under, we need to be watching for buyers stepping in and pushing it back over that level. And then the other scenario is that we see upside. I don't see it being super likely. We need to get above today's highs really to start getting that upside. We need to get above that ES breakdown candle that I showed you to have any sort of rally. But let's say that happens. It's not uncommon for correction patterns to go in an ABC pattern. So you'll get a down move, you'll get an up move that does not break the recent highs, and then you'll get another down move to make a lower low before the correction low is put in. So in that case, we would be expecting a rally that would come up to potentially this 325.70 level. The other level to look at would obviously be this gap, right? If we do happen to get up here and we see a pretty powerful rally try to shake out some bears that were late, we would probably see it come and try to test this gap. So around the 328 to 328.50 range, that would be your upside heavy resistance. If we were to see that bearish rally, watch that area and see how price is acting. If we can't get past that, we'll likely see an ABC pattern on the way down. But I actually think we're going to get more downside immediately. And I'll show you why, and nothing's ever for certain, but we'll go through the sectors and I'll show you why I think that. First of all, small caps. These do not look good whatsoever. They really don't look good. We closed below the recent lows. So here's the last low that was made. The low on this is 163.54. The close for today, right here, 163.51. 3 cents below, right? There's no mistakes when it comes to closes. And yes, it can be a fake out, but I'm not leaning that way. We have a trend break. We finally have a trend break. We're under the 50. We closed 3 cents under the recent lows. So right now, again, you have the same kind of gap here, similar to the SPY. You have a gap. On any rally, you'd look for that to be heavy resistance. If we were going to have the ABC, you'd look for that to be heavy resistance. If we open still under or at where we closed today, I'd be looking for the bears to push the lows of today and potentially give us more downside. But again, in this volatile market, you have to be aware of both sides and where the resistance and support is going to be. We get above this gap, right? That puts us in a little bit more bullish state. We might run up and test the breakdown candle high, which is quite far away. But again, we've broken trend here. We broke trend right here a long time ago. We couldn't get above this weekly trend line. And we had a pretty poor close. So small caps, money is flooding out of those right now. And we haven't quite gotten to our major breakout area. So this still has some room on the downside. And that doesn't mean it's going to go long-term bearish, right? We still have a weekly chart. And we see that, boom, we have a moving average right there at that breakout area, 159.78. That may rise a little bit over the next day or two. But yeah, that's the key area in the IWM, and it's not quite there yet. We saw a poor close, so I'm expecting more downside. Let's look at the transportation average. This is another good market leader, good indication of market direction. And once again, we have a rejection of this very, very important trend line to the DJT. We can see how important it is. This was drawn only when it had 2 touches, and we've now gotten number 3 and 4, both with rather sharp rejections. And what is this on the long-term time frames? Well, it's a big ass bear flag, right? It's a bearish wedge, right? And we're back under the red zone. We went and tested the next important zone, right? So we have a breakdown, and we are consolidating. Is this going to drop further? Maybe. It's looking very far away. All right, that's very big picture stuff, but it's very interesting that this market leader would be looking like that, right? But then you look at it another way and you see, well, okay, we had a bit of like a bullish consolidation here after an up move. We've broken that, hovered, we've broken, and maybe this is just a pullback before we continue higher. So either way, both of those scenarios are possible, and we kind of just have to play it one day at a time at this point. As far as the daily close, we've broken short-term trend. We closed below the 50. We can see that was resistance today. We closed below this reversal candle showing weakness in this market. And yeah, I mean, it's really not looking good. It's looking like we will come lower, retest this trend line, retest the 200 perhaps. It's really not looking like a strong market. As always, you have the possibility for this one's kind of already an ABC pattern, right? We had an A, we had a B, and here's the C. So do we just continue dropping? Well, we had an okay close, in my opinion. I don't think it was terrible. It wasn't quite as bad as like the IWM looks, but it was no doubt a bad close. So I wouldn't be surprised again to see just straight down, just further dropping early this week. We do have a lot of earnings coming up, so we have to be aware that those can shift the market. And if they do, you know, we know what to look for. We know the important levels to look for if we're going to see upside into a downside, or if we do pass those levels on the upside, we know where things are going to turn bullish, right? You see the DJT get back above the 50 tomorrow, and it gets back above this reversal candle low. That's a good start. We close the day up there. That's a really good start. You get back above this gap. That's a great start. Then you're looking a lot better, right? But right now, this market's just not looking very good. I would put money on it that this has more downside, whether it happens tomorrow or the end of the week or early next week. I would bet you this ends up lower in a week or two's time. XLF financials, another chart that's just not looking great. We have, I believe these are weekly trend lines. They are weekly trend lines. So we can't necessarily put too much weight into that trend line break yet. We have not had a weekly close below. It's only Monday. But again, right, notice moving averages definitely well below. We bounced at this gap support and former breakout area. So that's not necessarily a bad thing. That's showing that we may see a small spike in the financials coming tomorrow or Wednesday. The next couple of days, we may just consolidate around in here for a little bit. We've broken short-term support. Here's the short-term support trend line. We've broken and closed below that. That's definitely a negative. So if we come up back into this gray zone around the low 30s, up to even the gap at 30.4, look for there to be very strong resistance at this level. That would be the spot that you'd be watching for either a break over to turn it back bullish. That means we would go test this breakdown candle high. That's really the last area. If it gets back and closes daily above that, that's a really strong sign. But I'm guessing this will probably also see more downside. Look for that area to be strong resistance. And again, targets can be around the bottom of this consolidation zone. If we zoom out to larger charts here, you can see it's got that consolidation zone here, and below it's got that weekly gap. And that weekly gap also aligns with several other pivots. So major target is down in this 29 to 28.70 range, right down in here. Okay. Again, something that can happen is it visits that zone, it pops back up and maybe closes above the 20 to end the week, right? And we go back on our way. We have a nice correction. The market's nice and healthy now, and we can continue on our way up. We have to remember there are still many long-term bullish breakouts that are still intact. There's nothing wrong with them. But on a shorter time frame, it's still looking like more downside is to come. And then the SMH, this one is looking okay, right? We haven't broken the trend line here. We actually held that today, closed above, so fair enough. The SMH is looking all right. We had a gap just down here. Gap is at 140.79, and low of the day was at 141.25. So we couldn't get to the gap. However, we didn't really shoot away. Whenever you come into a gap, if you miss it, it's only bullish if you shoot up and close on the highs. You see a nice rally away. If we go down to like an hourly chart, you can see we shot up and boom, we just trade near that gap level and we finish down near it. So not necessarily a good close at all. It's signifying weakness in the SMH, but it has quite a bit of support here. Once it gets below this area, potentially breaking trend, you're looking at the very obvious breakout zone that it had right here. Now, we've talked about this before. You've got a gap here, gap here, gap here, gap here. You've got a ton of gaps. So somewhere in this area, combined with this trend line, should see some very nice support in the SMH. You'd likely get a nice rally out of that zone. And then let's just take a look at the Qs. These were probably my favorite short out of any sector because we got this very important trend line popped above and rejected with a bearish doji. So we can see that one was down 2.07% today compared to a SPY at 1.6, an IWM at 1.14, right, and XLF at 1.5. So the Qs got hit pretty damn hard today. I don't expect that to stop anytime soon. This sector really needs that correction, and like I mentioned in my weekend video, I believe, right, we have a clear breakout area right here. We have a breakup candle low here. You can see the market really struggled with this area, went sideways a lot. Lines up with the 50 just below, which will be a little bit higher as time goes on. And again, a poor close, right? Not the best of closes. We hit the gap right here, 217.2 about today. The low, 217.18. So we actually missed the gap by 3 cents, I'm seeing now. But again, this market did not see a significant bounce away and price action trading up. We just saw a bounce and we came back to close the day poor. That's showing me market weakness, that the gap is not the final destination for the Qs. The next area I'd be looking at is again around this breakup candle low. You should see heavy support at about 212.50. Okay, that's going to be it. Hopefully that helps you guys kind of see where the market might be headed in the near future. Again, on SPY, keep this zone, 320, low 320s. It's going to be a massive zone for SPY. I think we should see a very nice bounce off that level. Doesn't mean we are going to go bullish necessarily, but definitely for intraday and possibly a short swing, look at that area. Okay. Thanks for watching, guys, and I'll see you in the next one. Peace.